As promised, we have Mahindra & Mahindra's top boss with us. They reported, of course, M&M reported numbers yesterday. Healthy volumes, revenue growth, but margins were impacted by, maybe a little higher proportion of EV sales. Anish Shah is Group Chief Executive Officer and Managing Director at the Mahindra Group. Anish, great to have you with us here. It's always a pleasure.
Likewise.
To have you in the studios. We'll get to the numbers in just a bit, but I have to address what is top of mind this morning, which is tariffs. Now, auto OEMs, in terms of exports to the US, is very small. So in terms of the direct impact, it's not very much. I'm not asking for a Mahindra company impact. But as a leader of the industry, Anish, auto ancillaries there are large exports into the US markets. How disruptive is this, and how do you think about it? Because when we started all of this in March and April, at a broader level, the expectation was that we probably will end up with a lower tariff compared to peers, countries around the region, etc. We are actually on the other side now. Most are at 15, 20, we are at 25 plus. Your thoughts?
The story is not over as yet. I think there's a lot to be done. And based on what we've seen our government be very balanced. There's a good relationship between both countries. So I think everything will work out well.
You think these will be negotiated lower? Or?
I think we're still a little ways away from the end state. So I'm very positive that things will work out well.
Specifically with regards to auto ancillary companies, I mean, any thoughts at all at a broad level?
I think it's still too early to say. I think we just have to wait to see how this progresses. We have to do what's right for the country overall, and I think that is what the government is doing. So I do feel that things will work out well. As I look at the UK FTA, I think that has been brilliantly done.
Yes.
It's a great win-win, and it's one that positions us very well on the world stage. And there are others that are in the pipeline as well.
So that's on tariffs, and fingers crossed, keeping the faith, like you're saying, picture abhi baki hai. Maybe that's how it's going to be, and 25% will not be the ultimate levy that we'll get. Now let's talk about the performance. And Mr. Shah, it's been superlative once again. Good volumes. The profit growth is, 30% plus. The revenue growth is 26%. But I want to come to the more challenging part, right? Because that's what the market always looks at, because your stock has done so well, and that's margins. Now, people will want to understand that as the share of EVs keeps rising in your mix, and those cars are selling so well, right? What is the trajectory for margins for your automotive business?
So any new launch has lower margins, and that's what we've seen over time, and no difference here from an EV standpoint. With EV, it gets a little accentuated because we have 6 launches with one platform coming in with EV. And we have been showing the difference in margins for ICE and EV right now. Our ICE margins continue to be very healthy and very strong. And on the EV side, as volume grows, we will see that catching up. Volumes will grow over the next couple of years, and we feel that margins will be at par with ICE. And that's something that we have to demonstrate, as we have with all of our previous launches.
So just to put some numbers to that, ICE as things stand, as commodity costs stand, and competitive intensity stands, where do you see ICE margins by the end of the year? And where will the EV margins be? Or if not EV specifically, where would then blended margins be for autos?
So we've stayed away from any forecasts on margins. Our ICE margins were much lower 2 or 3 years ago. I know there was a lot of questions when the XUV 700 was launched, because the margins were lower when that was launched as well. And at that point, we had deviated and given a forecast saying we will grow 300 basis points in the next 18 months or so. And we beat that handily and have grown much more since then. So we are in a very good position. My sense is we are probably the market leaders or close to it in terms of margins. And we will continue to focus on growth in margins, but more important for us is overall growth. And that is what you've seen us deliver. Our capacity has gone up 4x now in the last few years. And we continue to add capacity. And we continue to see very strong performance across each of our brands. In a flat or close to flat market, we've grown 22% this quarter. and market share is up 5.7 percentage points. That's something that typically is well beyond what we've seen anywhere.
But can we say that near about 14%, which is where your EBITDA margins are at the start of the year, first quarter, is that a floor, or could the flux and the changes in the mix, could it take it lower before it recovers?
In the world we live in today, I can never say something's a floor because we will always have some challenges.
Okay.
What we have learned is we get back from the challenges quickly enough and we come back. So I would look at it as a good margin for us. We will strive to continue to increasing it. We would love for that to be a floor, but the world we live in today, that may not always be a luxury.
All right, and beautiful to see those Mahindra vehicles on the road look absolutely splendid. That said, let's focus on the other part of your business, the tractors business. It went through a bit of a lull, I think 18 months or so ago, but the tractor industry itself is looking up and you have been gaining market share. What kind of a growth number could you give us in the tractors vertical? And your market share has already improved. Do you see further scope for improvement from here?
So industry has grown. Our volume is up 10% this quarter. You're right, our market share has grown very well. We are at 45.2%. On tractors, I would look at it slightly differently. At a 45% market share, our message to our teams is we are not going to focus on market share growth. We're going to focus on execution. That has been our message for the last 5 years. And we've gone from 40 to 45%, driven by strong operating excellence in what we do. And that is the approach to market share growth there. It is product, it's operational excellence, and that has worked very well for us.
Okay, all right. Mr. Shah, final question before we let you go. And I need to ask you this because we get asked this query quite often. Is there any kind of value unlocking exercise in the works? Would you consider demerging both these two businesses, since both of them are flourishing now, both of them are growing at a good pace? Is that on the cards sometime in FY26 or FY27?
So this has been a question I've been asked for the last 5 years. And 5 years ago, I said, we're going to first focus on operating very well.
Yes.
And that will be the value unlock. We've grown a market cap 12x from April 2nd, 2020. And that has been hopefully a good value unlock. We still feel we have the ability to continue on that path of operating well, being able to grow, and all of this has been organic so far.
Right.
It has not even been driven by acquisitions. We will likely look at acquisitions, but we will look at it where we can significantly grow one of our current businesses, or we find some amazing opportunity that we feel we can deliver returns with. Because what I also want to highlight is a performance you see now, and you've seen that consistently for multiple quarters, is driven by all our businesses.
Yeah.
And we talk a lot about auto because it is a very exciting business.
Yes.
But Mahindra Finance, TechM, Life Spaces, logistics coming back very strongly now, holidays, Sustain, Excello, all of these businesses are contributing very well to our growth number. And that is what's delivering the value unlock.
So no demerger.
No demerger. We are hearing no demerger.
No demerger.
Is nothing for now.
For now.
You said you've been asked this
Nothing for now. Yes, we will always look at value creation for shareholders. So it is never off the table. But as I said 5 years ago, we're going to first focus on what value we see today.
Yes.
And then we will evaluate what.
So in the near term, it's not on the table, but maybe we'll have to see how things unfold.
You spoke about, I asked you this question 2 or 3 quarters back, and you said, you turned the question on its head. You said there's a conglomerate premium, perhaps, not a discount.
We are starting to see it head that way, right? Because we are starting to see analysts recognize the fact that businesses being together can actually add more value. And that is what also, you're right, I've said this before, which is we will evaluate very carefully what is the value of keeping them together versus separate. Right? Our focus is on shareholder value creation. But we do believe that there's greater value in many ways of keeping them together. And that's what we've seen. So that's part of the exercise we will do at some point in future, not in the near future, possibly not in the medium term as well, but at some point.
And we'll keep asking you every quarter, maybe. We'll be nearer, but we'll see.
When my response is mistaken, at least.
So just a broader question. We've been, again, this is not new, but has consumption maxed out? That's been a question, even at the premium end. I mean, we've asked that question, but as your sales, SUV sales have shown over the last many years, clearly that has not been the case. But I'm asking again, are you starting to see a little bit of that, maybe?
In fact, very much the contrary in our view, because if you look at almost any metric, penetration of products in India is far lower than anywhere in the world. And India is growing as an economy. Yes, we will see some bumps along the way, as that will always happen. But rurals come back very well. Urban is slower right now. And I would expect the second half of the year for India to be a very strong second half.
For your business as well?
For the economy overall.
And for your business as well?
For our business, I always expect the next quarter to be very good.
Just need to be at one of those Mahindra showrooms, and I was at one a couple of months back to realize there's no slowdown in India. But very quickly, you mentioned acquisitions. So is there anything cooking in the kitchen right now? Which segments, what size, geographies?
We are always cooking in the kitchen. And we look at anything that might help our current businesses position themselves much better. SML was a specific example on that front. But we have a very high bar. And we will do things only if they are accretive, if they make sense, if they will really add value for us as well.
All right, Anish, thank you so much once again for dropping by. And it's always a pleasure chatting with you face to face. Really
Likewise.
Appreciate it. Good luck.
Thank you.
Thank you.
Well, I think that is the sort of view coming from the top as far as the Mahindra Group is concerned. A 360-degree view. I mean, we started with tariffs really at the top, and then, of course, micro with regards to the business itself, and rounded it off with that, value unlocking question as well.